Hello and good afternoon, good evening everyone. Jonathan Mallard here, and we're going to get started in just under 15 minutes with Nic Chahine. You may be seeing this title and you're thinking 90% of your option trades, that sounds pretty crazy, but we're not just pulling your leg. This is the real deal with Nic Chahine. And it's not just because he's an awesome trader. This really does come down to the math. So you don't have to be good at math. We'll just teach you his system. So make sure you have your pen and paper or whatever you're using to take notes ready. And let us know where you're tuning in from. I'm broadcasting here from Detroit, Michigan. And Nick is out on the West Coast. So we always love to see where everybody's at. Let us know that you're ready to go, ready to take notes. And this should be a great session. We'll talk to you soon. All right, welcome. I see Robert tuning in from Los Angeles, someone on their Samsung from New Jersey, so all over the country here. I'm seeing Robin, Lisa, Tom, and Duck Sauce in the chat as well. Happy Sunday indeed. Feel free to let us know what type of trading you already do. Are you a beginner? Have you been trading options for a while? And do you know what a credit put spread is, or a vertical spread? Have you ever heard of a vertical spread before? If not, that's totally fine. That's what we're here for. That's a big part of this whole winning 90% of your option trades that we'll get into. Awesome. I see someone tuning in from Alaska, and just let us know, where are you at in your options journey? And Frank, fantastic. I'm glad that at least you know about basic options. That's where we all got to start. Fantastic. All right, thanks everyone. Let me know when you're ready. I mean, we don't want to bring Nick on unless you are all ready to roll. Just throw something that says ready in the chat. Shaquille from the UK, across the pond. Awesome. Florida, Iowa, 1 year options trader. Fantastic. All right, let's do this, everybody. And I am just getting out of this presentation here because we are going to get down and dirty here with Nic Chahine. And I'm so excited for this session with all of you because this has really changed my trading. My name's Jonathan, and I've been working with Benzinga for about 4.5 years now. And just learning from Nic day in and day out has just been so key in a part of my own development. And so I'm really excited to bring that to all of you here today. And then just a little bit more about who Nic Chahine is. This is just a little screen grab from a while back, and the success rate here is pure binary. Did the stock itself go up or down within that time period? So 68% ain't bad, and we're going to show you today what you can use to get more like a 90% win rate on your trades. And these are primarily something called vertical put spreads or other types of vertical spreads that Nic uses. It's not the only type of trading that he does, but it's a very key component of his strategy. So even if you've never done that before, don't worry. We're going to go through all the basics with you here today. And yeah, it's going to be a wild ride. So it looks like Nic is still just wrapping up one of the videos for his Inner Circle chat room. So he'll be here with us any minute. But what you can expect today. Basically, we're going to cover some just fundamental principles on risk mitigation for trading in general. Just some really good principles from Nic, his do's and don'ts of trading. Then we're going to start with what are options. We're not going to spend a ton of time on that. We're going to assume that at least you have traded a call or a put before. And then we're going to spend the most of the educational part of today on how can you use vertical spreads to win 90% of your trades. I mean, if we can do that, that'll be great, right? We're all here to make money no matter where we're from. I saw Spain, Jamaica, West Coast, East Coast in the US, anywhere in the world. We're all here to make money. And then I do have some surprises for all of you today. And there is basically a way that you can trade with Nic Chahine on a day-to-day basis, get picks from him, as well as get live mentoring and coaching from him. But we'll get into that later on in today's session. So it looks like Nic is in the house. So welcome, Nic. Glad to have you here.
Yep. Sorry, I was doing some stuff for the gang. So hold on. I'll show you my visual once I figure it out.
No worries.
This will work. Am I on? Am I on? No, wait. There I am.
There you are. Yeah, you're going to look a lot better than I am because I spent
I doubt it. I doubt it. So I was working. So basically, I worked all day gladly because it's with the group. So Sunday mornings, that the chat room members have the opportunity to join me on a 2-hour webinar, and that's a standing date on Sunday mornings. And we run through this week. It was 156, I think, 156 stickers. So it's a busy day prepping it yesterday, busy day going through it today, disseminating the information. And then as every Sunday evening, I put out what to do this week and what to expect this week and what pitfalls and what opportunities lie, like a big picture. It's like 9 to 10 minute video. I just launched it everywhere. So hopefully I didn't forget anybody hanging. So that's what I was doing. That's why I was late a couple minutes. Usually I log in a little bit earlier.
Yeah, no worries. I told them you were probably busy with that. I'm doing all right. I mean, to be honest, I spent all weekend in bed, but I'm on the upswing.
Oh no!
And it's always a highlight of my weekend to be here with everyone.
You kicked whatever you have, so that's pretty good.
Yeah. I'm grateful to be here and be back at it. And so the title for today is how to win 90% of your options trades. And that's a pretty tall order. I mean, for anyone. And so just a lot of people here. I'm sure some people have heard of vertical spreads, some people have not. But what I told them was that we would start with your basic principles that we always talk about with managing your risk and principles to live by when you're trading. Trade like a pro, and then we could really spend some time on this strategy that, for me personally, I mean, it's just completely changed the way I look at trading
Yeah.
because of what you've taught me.
Yeah. It sounds boring. And to a degree, it is if you do it right. Occasionally, you get some excitement, which is not the goal. But it does have a higher hit ratio than anything I've ever used. It is finite in nature, like how much can I make, but I can consistently make that. And you basically play around with the odds, and you put the odds in your favor. So we can cover that. So yeah, like you said, I'll get started with. I'll share my screen if you don't mind.
Absolutely.
Okay, I'm still trying to get used to this. Screen 1, 2. Which one am I sharing? Pro habits. Maybe this one. Maybe this one. No, maybe that one. Okay, I'll share this one. What do we see? You see trading with pro habits?
Yes, sir.
Okay, good. All right, so this is a presentation I did for us and me and Jonathan, I don't know, about a month back. And I love it because it's so simple. And this is basically the message that I try to portray to everybody, whether you trade with stocks or options or widgets, whatever it is. These are things that somebody that wants to be successful should do. All right, so I call them the pro habits. It all revolves around the fact that you need to have a method in order to develop the confidence in the method. And this it became clear to a few people in the chat room last week. They said, oh my God, I've been in this chat room lost for a while, and it finally clicked. Because the part of the chat room I also share, other than a chat room, in addition to the chat room, something completely unexpected and not committed to from the beginning, I share my screen like this all day, every day, to anybody that wants to watch it. And we've averaged about 250, 230 every day. So in that, we talk charts and opportunities, but it's all on crack, like it's all fast. But we do discuss other things, but mostly it's to get fast trade opportunities. But after watching it for a while, it clicked. We don't take any trades willy-nilly. Everything has a purpose. And that's how it should be everywhere for everybody on any time frame, whether you're doing it right away or taking a bet for a month or a week or 6 months or 10 years. So the method gives you the confidence, but you also need the discipline to make the method count. So if you develop a beautiful method, I had somebody, a new member, I forgot his name, send me a PDF. It was like he had to narrow it down to like 6 pages. So he had a plan on how he was going to attack it. There's multiple pages, real thought out, what to do, how to do it, what not to do, and all of this. So if he didn't stick to any of that, it didn't matter if he came up with the best plan. So far, he sounds pretty good at it. Okay, so we can make it as a slideshow, but I'm not going to because my monitor will go whoop and your picture will go crazy. So I'll just scroll through it like this. So I'll talk about risk. And I want to break it into 2 pieces so that it becomes clearer what we're doing when we're actually taking a trade. So when you decide to take a position, regardless of how you want to take it, with stock or with calls or with puts, whatever you want to do, even with the futures, you decide on how much you want to risk, the amount of money you're okay losing. And every trade should be where you're okay losing all of it. If you're not okay losing all of it, that trade is too big. You need to reduce it because it happens. You do lose all of it every once in a while, and you don't want that. But if it does happen, you have to be able to be okay with that. So that's number one. Everybody gets that one right, but that's not managing risk. That's just managing your finances all together. The managing part comes with the second part of risk, which is what are the odds? So it's odds and opportunities, basically, or odds of and consequences. So what happens when it goes wrong, and what are my odds of it going wrong, basically. So this is the part you manage, because I doubt you're taking trades where you think you're going to lose. You take trades where you think you have an advantage. The advantages come from you, the percentage. Oh, I think I have an advantage. I think my odds are 70%. Well, where did you come up with that number? Regardless of how you come up with that number, you need to track it in your head. The reason why I like my style of trading is because that number is given to me every day, every minute of every day. All I have to do is just open up an options chain and I know what that number is. By the way, even if you don't trade options, you can use that number to determine your opportunity. Let's say you trade stocks. There's a way, and let's say you think that that stock is going to 100. You go to the options chain, and the options chain will tell you what are your odds are, depending on the time. If you say it's going to 100 in 6 months, and you go and the options chain showing you you have like a 5% chance of that happening, you should temper your enthusiasm. So even if you don't trade options, there's a ton of data, of information in there. And if you don't know how to use it, it's very simple. Just learn the basics and use logic, and you'll come out on top. So that's the part we manage. What are the odds? How is that important? When you take a trade, you need to check back into that number in your head. Is it still a realistic number? I had to talk to a few people last week where they had calls, which is a bullish position, and the calls went against them. So then they found themselves on the back of their foot, the back of their heels, however you say that, on the back foot, at a disadvantage, and they were deciding whether to cut it loose or not. Well, this is where the decision would be like, okay, so my chances of, let's say there's $500 left in that trade. The statistics say that they're pretty much dead and dying. So if you don't do anything, they're going to go to zero. So why not either close it and salvage it, or if you still think it's going to happen, you just ran out of time, then you take that risk off and you redeploy it, same size, somewhere else with better odds. So you're managing your chances of success. You didn't take a trade and you just let it die on the vine. You did something with it. So that's the part you manage. It's pretty important. That's like where people win or lose really in the long term. If you get good at this part, you're rarely going to go. You're rarely going to go to zero on a trade unless you're completely blindsided. Sometimes a headline comes out and you just can't help it. But those are rare. Thank God. Okay, so there are no shortcuts. And the goal is to leave very little to chance. This statement right there tells you you shouldn't lay big money on earnings because it's all about chance. You say, no, I know they're going to blow the numbers out of the water. I have no doubt. I've yet to see a bad report card. Oh, yeah, they missed estimates. Forget about estimates. Those companies that missed estimates sometimes doubled their businesses. How is that bad? There is no bad news when you double your business. They spent too much. Who cares? They spent too much. Amazon spent too much for 10 years. They built an empire. CRM did the same. So spending too much goes hand in hand with accomplishing good things. Look at Tesla. So a bad reaction to an earnings report is not a bad report. In fact, look back at all those companies, even silly companies like Roblox. I say silly because they're the new style of company that has not taken, that Wall Street does not like yet. I think they were the ones that grew their sales 80% year over year, but God forbid they disappoint somebody's estimate. Who was it? Buffett said something along the lines of, estimates only tell you a lot about the person who's giving the estimates, nothing about the business itself. So how good are you at setting estimates? That's all it says. If you open a pizza shop and I'm a pizza expert, I come and say, you should grow your sales by X%. And then you double your sales, or you should be profitable by X%, and you double your sales. And I say, well, profitability could have been better. You suck. You flip me off and say, I doubled my business, dude. That's the concept. So earnings, complete chance. Be realistic on that. I say this because we're going into bank earnings. All right, so you do homework. The way my method is, I do homework, and that's a lot of it. Hours and hours at a time. Like today, 2 hours. Yesterday, at least 4 hours. Tonight, at least an hour. I need to do 4 videos for the week. to prep myself and share the trade setups, but I'm doing hours of work to deliver one blurb. Here's my idea. So even though I'm not a trade alert service, I do share my trade setups, and they can be as such. But I think the content is more of a lesson than an actual trade. The value of the content is the ongoing lesson for however long you're a member. So homework is inevitable. And if you rely on other people's homework, vet it. Make sure to dig through. Don't just jump in because somebody on CNBC said so. Somebody on CNBC already has that trade, and it benefits them for you to go take the trade. They are talking their book. That's what they say. You think that the Nigerian, good guy, waits to take his trade when he sees an unusual options activity before he tells you, so you can have a fair advantage? So, okay, I'll take the trade now. Or does he take it and then he tells you about it, and all of his friends have it, and then the thing runs to high heaven and they're out and you're holding it back? So anyway, do your homework, set your alerts, and wait. I set dozens of alerts every day. I have dozens that fire off every day. I spent an hour yesterday resetting alerts. What does that mean? I go through all the alerts. They'll go to my email. I go through which ones I need to reset and which ones I can act on them. So if I have a stock up here and I wanted to get long down here and it falls, the alert comes off because I set the alert when it was up here. Hey, it's too high. Wake me up when it comes down here. And it comes down in there. Go check it, Nick. I go check it. Okay, I still don't want it. I reset it. Or, okay, now it's time to take it. So that's how you can track hundreds of tickers and not be active all the time. You set your alerts and wait. And this is the most important part. This is an acronym that spells out no trigger, no trade. Simple. You don't have a reason to get long. You shouldn't get long. If you can't tell me why you're taking a long right now, oh, I feel like it's going to go up. I feel like it's going to go up is not a reason to take a trade. Why do you feel like it's going to go up? Give me a reason. Because of whatever. Then fine. And that reason can be technical on the chart, or it can be thesis. Let's say you think CRM is going to do something extraordinary and you have an inside look on it, or not enough people are watching, then you take it. Like I wanted to short forward when everybody loved it. Mind you, I issued a long forward at 7 to the group years ago, and it went to where it went. Same with GE. And then they approached me, oh, is it time to reload? That was like 25 or whatever it was. I was like, hell no. I said, I actually want to short it. They said, why? I said, because the P&L is going to be in shambles if they're going to switch to EVs. There's going to be a transition period where it's going to be ruining the P&L. They're going to cannibalize profitable sales with non-profitable EV sales until they get the formula right. Unless they split the stock into an EV company and a non-EV company, I think the P&L is going to be detrimental. And sure enough, them and GM, the stock has gone down since then. So I had a thesis. I didn't have a reason on the chart. I just had a thesis. I had a reason not to chase, that's for sure. I didn't short it because I didn't feel evil. But if you force me to trade it, I would have shorted it based on a thesis. So if you don't have a trigger, don't take the trade. And that's as simple as that. The litmus test is kind of silly. Picture like a parent, like my mother is 90, and she has limited funds because she lives in Lebanon and the banks are broke. She has money. She doesn't have money because the bank is broke. So she's, everybody has to live like they're poor because there's no money available. So she clearly cannot take a trade without a really, really good reason, right? In theory, she doesn't trade, but in theory. So if I can go to her and say, you know what, you can risk that much money on this trade because that's how confident I am on it, then this is like the ultimate test. So find somebody in your head that you would feel bad hurting their feelings by giving them a bad trade, or you're scared of them, and have them be the ogre, the last test. Is this a viable trade? Do I believe in it that well? Okay, so once you set the trade, we go back to this one, managing the odds. Manage your odds. And this is super important. Stop out. And stopping out is both ways. If things go well or things go badly. So you need a place where you say, oof, way too much pain, I'm out. You need a place where like, I've had enough. Even though it's going to go to the moon, I'm okay booking now, or at least booking some. So I've called these the ABCs of trading high VIX, because everything is so muddled. We have so much going on in the headlines, so much grave stuff like world war and whatever, and a combative Fed, which is a fact now, it's no longer fiction. So you need to be having insurance if you need it. So on rallies, what do? I add insurance. That's the A part. I add insurance if I need it. And I book profits. That's the B part. I book profits much faster than normal. And the C part is I close losers. So if I had a position that was, I used that on Friday. So I shared last week an Iron Condor with Amazon. It was working great. At one point in the week, the upper end, an Iron Condor is a two-sided trade, bullish and bearish. So when Amazon rallied last week, the bearish part got under fire. The bullish part was almost all completely won. So somebody with proper management, they would have closed much of the lower end. So I closed some of the lower end, but I left some open. And then you know what happened at the end of the week. Amazon fell to 3,100, and that's where the risk was. So sometime in the morning, Amazon popped a little bit. I said, if you were worried about that trade yesterday, it's profitable. Yesterday was underwater. Today it's profitable now. You should be closing that trade. I'm pretty sure a few people didn't close it. I did. I paid 70 cents to get out of it. I potentially left a lot of money on the table, but in hindsight, I did the right thing because it closed below. So me paying 70 cents saved me from $4.30 per contract of loss. So was it that much? I can't remember, but it was a complete loss if you had held it. $3.30 because they collected. Anyway, never mind. So on a pop, I used the pop to close a loser. So those are important things to do. Stopping out in everything I'm doing now because of the environment is tactical. So I'm not loading up for the super long term because we don't have that much clarity. But I see a lot of opportunities. So I want to trade these opportunities, but tactically. So I'm forcing myself out faster than I would. And it's coming out to be a much better way to handle the risk overall. So locking and booking profits goes hand in hand with that ABC spiel I just gave you. Again, it's taking a risk that's appropriate in size with good odds of success, meaning there's forethought behind it, like why I'm taking it and all of that. And then managing the odds of that risk and then stopping out when appropriate, if bad or good. If you have that, then you know why you're going in, with how much risk, when to get out, and what kind of decisions you need to make to get out. If you don't have these things, how do you know when you get out, when to get out? You will inevitably overstay your welcome. Okay, so other do's and don'ts, basically having balance. If you're long, Teladoc, Roblox, Skills, IWM, AMC, GME, you're long the same stock. And one bad day for the small caps, you're in PayPal. One bad day for the small caps, and your portfolio is in deep trouble. So spread the risk. Be long this, short that. Short this, long that. Be long some tech, some this, some this. Just have a credit call spread somewhere. Short the indices. If you're long if you're long all these stocks I called out, be short the IWM or the RUT, the actual index, a little bit by credit call spreads, which is a bear call spread, which is a bearish trade using options that doesn't require a drop to win. It's just if it doesn't rally, you make money, and if it falls, you make money, but very finite amounts. But it's still balanced. So have some balance. Be short oil or short something. It's just being one-sided makes for really good days and really bad days, and overall it's frustrating, and you end up leaving the business. So, and spread the risk. What do I mean by that? Not making spreads, although that would be spreading the risk. But if you decide on taking positions in company ABC and you take the entire position all at once, how confident are you? Spread the risk, meaning take a position, part of it, because I want to get you out of averaging down. So it bothers me that I'm seeing this acronym come up more than I want to. IDCA the thing. I was like, what was that? A dollar cost average, which is averaging down. The fact that you have an acronym for it, you're doing a giant mistake. I don't know any professional traders that DCA anything. It's a horribly bad idea, because what it says is I took a full size position. It's completely wrong against me. I'm doubling my problem with no new information. You have no new information. You're doubling the problem. On what planet does that make sense? It does not make sense. So what you need to do is, if that's what you want, you need to average in. So when you take the position, take part of it. You don't take all of it. Then you can add. You're not doubling down. You're actually bringing your position into a better price point, because they don't ring bells on, okay, best time to go in now. Since you don't know that, you take a position, and if it falls, you choose to add, maybe, maybe not. If it rallies, you're already long. Who cares? That happened to me with crypto. But yeah, we do cover crypto. So I put out a video months ago, and I said Bitcoin, I think, has a correction coming. And if it does lose the middle 40s, it's going to fall to the low 20s in several steps. I said step one, it bounces around 33, and it bounced exactly at 33. I said when it gets there, I'll take 1/3 of my position. And I did. And then I got 40% rally, because it tried to recover over 46, in fact, last week, but it didn't hold it. It went back below 46. So unless it goes above 46 again, I think my plan is still in place. So they're telling me, well, you missed out. I said, I didn't miss out. I told you I took 1/3 position. Well, it's not a full size position. Who cares? I just made 40% on whatever investment I made into Bitcoin. So that's why it works. And I still think we get 28 and 21 this year in Bitcoin. How that happens, I don't know. I'm not bearish Bitcoin. I'm super bullish. But because of so many skeptics are out there, they're going to have to capitulate. We're going to be dealing with electronic money one way or another. These guys, what we have now is what's going to lay down. Not all of them will survive, but the concept is definitely going there. And the central banks are in deep trouble. They're going to have to do something about it. So anyway, average in, not out, not down. No DCA, average in. Okay, don't hope. Why didn't you close it? I thought it was going to come back up. Well, what proof did you have? Nothing. So you're hoping. Don't hope. Change it. Change that. And if you have a trade that goes against you, like for example, somebody that had that position that I had that didn't close it late in the day, they came to me as I haven't done anything with it, and I closed it for 70 cents, which means one contract is $70. If I did 10, that's $700. He had at the point he came to me, it was already $2.50. So if he did one, it's $250, and if he did 10, $2,500. So, and with hours to go, if he did nothing, that would turn into $500, not $250. So the problem grows with time, tick tock, with hours to go. So I said, you can do nothing and hope it closes over 3,100 and no harm, or you can save what's left, and if you want, reopen the risk out a week or two. And now the important piece is you redefine the trade. You're no longer trying to make money. You're trying to get out with minimal damage. That's the goal. So what does that mean? When you reset your trade out in time, you don't mind paying a little bit and making it in a better situation. So if I was him, I would have reopened it out in time and lower to give me some room for error. But I would definitely, most definitely, do not increase the size of the risk. Absolutely not. I hear, if you know anything about options, you hear that term often. I rolled it down and out or whatever, and I added contracts to make up the difference. It's like, no. Again, you added risk to a problem trade, so you made your problem bigger. Not good. Okay, so these are the basics. There's no way around these for successful people. I promise you. And the most important part, it starts right here. Actually here, have a method. And the most important part of that method is defining risk the way it needs to be. First of all, take an appropriate size risk. If you're nauseous thinking about it all day, all night, out, too much. Position, give yourself a good chance. When you lose the odds, when the odds are a coin flip, when you buy a stock, your odds are theoretically a coin flip. But you do homework to give yourself the perception of edge. Your opponent is thinking the same thing. What opponent you're thinking? When you buy something or you sell something, there's somebody on the other side that actually does the opposite, right? So you have to balance the two together. Okay, so those are important things, and then all the other things go hand in hand. This is also pretty important. Don't take trades willy-nilly. If you don't have a specific reason, write it down. How do you know when to go out, get out? What if that reason is gone? If there's no reason, how do you know when to get out? Okay, and have a pain level. Okay, so I take fast trades during the day sometimes, and I say I'm risking 500. I'm okay losing 100. Sometimes I say I'm okay losing half of it. The other day, I took an IWM intraday setup that I shared with the people live. I said, whatever I'm risking, I'm willing to lose half of it. Oh no, 35%. It came down to minus 33% before I flipped and went all my way, and it turned out to be like a quadruple or whatever. I booked it at a double, but it went way more than I did. But I get out early, like I said I would, because I'm busy and I know I'll mess it up. So if it had hit my 35%, I would have gotten out, and I would not have been upset. I would have been bummed, but not upset at the fact that I missed out on it. Over the lifetime, it's a better way of doing things. So this is these are the basics habits that one needs to have. I don't think there's anything hard to understand. The concepts are simple. What's hard is to actually put them into use. So Jonathan, at this point, I'm going to give you the freedom to pop in anytime to see if you see. I haven't monitored the question and answer. So if you see anything that's pertinent to what we're talking about, I see there's chat. It's busy a little bit, so I don't know what they're saying. So if you can help me out, that'd be great.
Yeah, mostly at this point in time, most people are just agreeing with you on various aspects of of managing the risk and not averaging down but averaging in, things like that. So yeah, I think. Sorry, go
I
ahead.
see somebody, Terrence needs to be in the group. He's talking inverse head and shoulders. That's why we talk all day, Terrence. If you enjoy that, we are live talking that with my screen and a whole bunch of tools. I promise you, it's a lot of fun. Yeah, so it's good that you know technicals. If you don't know technicals, get with a group that could get you technicals. The idea of trading with a group is awesome. I never realized how valuable it is until I got my own group, and actually check that until I joined a group of 3 or 4 super confident, high level futures traders for decades at a time. They've managed their own hedge funds before, so they knew exactly what they were doing. And I promise you, they have zero news. And by the way, turn off all news. You can get the headlines and the data from your Benzinga Pro platform because they provide you the actual write-ups about things from the sources rather than reading somebody's interpretation of the news. Yeah. So these guys and gals don't listen to any news, and they trade foolproof. They have a habit, the method, and they are religious about it. Each has their own. They all write up a sheet in the morning. They know what they want to do. When they don't want to do, they wait all day. They take 2 trades and then they're gone. So you too can do that. So join a group. If not mine, find a group that suits you. I promise you, mine is very pleasant, and it's so diverse and it's global. I took a poll the other day. It was hilarious. It was from all over the world: New Zealand, Australia, Lebanon. There was Dubai in there, Kuala Lumpur. It was just insane. I loved it. So anyway, there was a question here. Somebody example of the average down and average in position. Seni, I already did. So maybe you can get a hold of the recording so I don't repeat myself to the people who actually were here when they heard it the first time. We're short on time. The simple story is, how do you join the team, John? You just follow the instructions from Jonathan later. So,
right. Yeah, we'll get into how to join the team in maybe about 30 to 45 minutes here. But just to give you the quick version, there's a link in the description if you're watching on YouTube, or I'll throw the link into the chat on Zoom. And basically, it's half off for the whole year. You get a free laptop. You get all the other picks that I'll show you about later. And that's good through midnight tonight. So you can watch the education and all this stuff on the recording later, but there's only 30 laptops available. There's about 300 or 400 of you watching this right now. So only 30 laptops available. And I'll share that link. But I'm really excited to get into the nitty gritty here, Nick, of
Okay.
what is a vertical spread
Sure.
and why does that change the math on the percent of trades that you actually win?
Okay, so we can get into the nitty gritty. So I'm going to make the assumption that there is some options knowledge here. But even if we're not, I'll bring in a picture that kind of, sorry, I'm like in managing monitor hell. I brought in a couple of new pieces of software to manage all the windows that I have open at any point in time, but I'm almost there. I'm almost there. So let me bring in a piece that would bring out the example of what we're talking about. Okay.
And just so you know, right now you're sharing the Pro Habits page. There we go. Awesome.
Yeah. No, I know. I'm just bringing something in here. Okay. I'm going to use this as a scratch pad. All right. So this here is an options chain. And I literally don't know why I picked Teladoc, but Teladoc was on there. So I'm going to use it as a blurb into what are options, and then we'll talk about spreads. So the idea of options is that they're all contracts. And when you have a contract, you have a buyer and a seller. Why do I say that? You often hear on CNBC, I'm picking on CNBC. We often hear on CNBC, they are buying this and they are selling that. No, they are buying and selling everything. They just make the assumption, because every buyer, there's a seller on the other end. So they make the assumption that based on how the transaction happened, one person is more desperate than the other. In reality, unless you know the buyer and the seller, you're just guessing. But so keep that in mind. There are two sides to every transaction on this piece of paper. So every contract has what? They have terms. In this case, they have duration. How long is the contract for? I picked May, which expires middle of May, 40 days. So this one has 40 days. That's one term. What's the other term? It's for Teladoc. What's the other term? It is for every contract is 100 shares. That's true for all of them. So every contract I pick is 100 shares. They represent 100 shares. So the contract is for 100 shares, whatever that contract is. I'll explain to you what the differences are. What other term there is? Price. I can pick whatever price I want to establish that contract. So, okay, so let's talk about these contracts. They come in a couple of flavors. We have a put and we have a call. This side right here, everything here is a put. This side right here, everything here is a call. So you're wondering, what the hell is that? Let's walk through the put side. It's easy to explain. Do I need to have shares in order to buy a put? No. The answer is no to everything on here. I don't need to have shares in order to buy anything on here. Okay, so who wants to buy a put? The easiest way to explain what a put is, it's a contract called a put option that allows you to secure yourself some insurance on shares you own. So if I had 100 shares of Teladoc, and let's say UNH is reporting this week, and they kind of move together, maybe, I don't know. I'm afraid that Teladoc is going to collapse. I want to buy some insurance on my shares. Let's say I'm okay to lose down to 50 and I want out at 50. So what I do is I go out and buy this thing. This put right here is 1.5, so $1.50 per contract, and each contract has 100 shares. So my cost is $150. And what would that give me? It would guarantee me insurance. So I have insurance for 40 days to sell my shares at 50, regardless of what the price is. I can at any point in time call my broker and say, I own this put, I own shares, get rid of them at 50. So price does not need to be below 50, believe it or not, but I'd be an idiot if I did that and then price was above. But technically I don't need it to be. I can, and also I'm not forced to do it unless I let it expire in the money, then my shares are gone. So the idea is that me, the buyer, I have the advantage and I have control. The seller, whoever sells me that put, because there is somebody on the other end. So you're thinking, well, this is a bearish move. It's not. There's only one scenario where a put is bearish. So if I was bearish, Teladoc, I wouldn't own the shares. I would not spend money to own the shares. That's what I'm doing. I'm spending money so I can own the shares. If I hated my car, I wouldn't insure it. I would get rid of it. This I'm paying for insuring my car. Therefore, I am assuming I want to keep it. I'm happy with it. So I'm not bearish. I'm spending money to keep it, me the buyer. The seller is not bearish because the seller wants to buy my shares. They're saying, hey, I'm a buyer of your shares for 40 days. Give them to me. I say, okay, great. That I may take you up on that offer. Here's my $150, right? So this is a share, and we're both happy and we're both bullish. One wants to own the shares, one has the shares. So it's a happy scenario. Now, some people sell the put to make money. They do homework. They see the opportunity to sell the $50 put. And it's like, there's no way. That's what they're saying. There's no way Teladoc will be below 50 in the next 40 days. I'm going to take that risk. I'll sell the put, make $150. The guy's not going to dent his car. He's not going to call and tell me, hey, buy my shares. So that's the idea. It's the insurance company taking a risk that the incident is not going to happen. So if that's the case, the seller of the put makes $150 out of thin air. So Jonathan mentioned a spread. So that seller of the put, is on the hook from 50 on to 0. That's a lot of risk in this environment, especially in Teladoc. We've seen what it can do. So how can they mitigate that risk? How can they make it more gullible? How can you make that trade fit in a smaller account, a $2,000 account? How can you make that trade work? Well, you buy insurance behind it. So you sell the put, you're on the hook. You buy a put below it, you're off the hook. So you're on the hook at 50, you're off the hook at 45. You still collect the credit. These are trades. They're viable trades with viable theoretical chances of success, which we will discuss in a second. And so they yield a pretty good profit percentage on the money at risk with very little money needed in the account. They're boring by design. The only way they lose is if something extraordinary happens. Okay, so credit goes into your account. When you buy something, shares, call spreads, you're spending money. You need a rally to go in your direction. Or if you bought puts, you need a rally to go into a drop to go into your puts to make money. In this case, I don't need anything. I just need time to go by and nothing happened. I win. If the rally comes, I win. If the rally doesn't come, I win. If the stock falls to 55 or 51, I win. I only lose if the fall stock below 50. That's the only scenario that gives me a headache. If I sell a put naked, I make more money, but I'm at risk. If I sell a put spread instead by selling one put and buying a put below it, I potentially make less money, but it's still a hefty sum. And I have a limited amount of money I can lose. So I can go to sleep knowing that I didn't put my family's finances in at risk, except to that extent and nothing more. So I mentioned odds earlier. Manage your odds. What if I told you one of these columns tells you exactly your odds are to win or lose? Yep. If you look at the delta column, there's one on the put side, there's one on the call side. You can go look up the definition of delta. If you want to spend your time studying Greeks, please, by all means, they're pretty interesting. I'm telling you the shortcut to putting them to good use right away. And the definition of the delta is something along the lines, the amount of money, the value changes of that contract with the value of with the change of $1 in the underlying stock. So if the stock moves $1, how much this will move? That's basically what it is. Well, how about telling you that these are your odds of success? Yeah, one definition is fancy, and one practical use of that number is as an odds maker. So think about it. This is current price at the time, 66, somewhere around here. Any call or put around here is going to be 0.5 delta. What's 0.5? What else do you know that's 0.5? coin flip, right? So 50-50 chance here or here, which makes sense. If you buy a call or you buy a put, or you sell a call or you sell a put, your odds are 50-50, thereabouts. The lower you go, the number shrinks. So let me work through this. Let's go to 35. What does this mean? A delta of 0.01. 0.01. That means that in plain simple English, it's saying there is little, that's a small number, right? There is very little, actually very small number, it's almost zero. It's very little chance that Teladoc, this stock, will be at $35 in 40 days. That's what it says. Very little chance it'll be at $35 in 40 days. That's what the contract says. That's why it's only 15 cents. Now, if Teladoc crashes, this 15 cents is going to explode. You will make thousands percent return on your, but there's almost no chance. That's what that's saying. So if you buy this one, yeah, it's cheap, but you pretty much wasted your money if that's your habit of buying stuff, unless you know something that somebody doesn't. Okay. We did this on Friday. That trade I told you that turned out to be big time big. I knew something and that most people didn't. I saw something in the IWM. I saw a big contract come at the 201 with minutes to go. I said, the only way the seller can make money is if price pushes up even for a minute. So I said, you can spend $50 per contract buying the RUT 025. What is it? 3025, wherever the RUT is, the last digits are 25. So they paid 50 cents and it went to $9.50. So if they bought one, they made $900 per contract. I chose the IWM and I made half of that, but it was still a good win. So if you know something, this would be a wow. But the statistics say, theoretically speaking, you're a fool to do it. Now you go up, your odds are increasing. Your odds are increasing. This one here, the one I'm talking about, the odds are about 13, 14, 15, 12, something like that, somewhere around 15%. So now it's still very low odds, but it could happen. So the seller of that put has the upper hand. They have an 85% chance that price is not going to be there because there's only 15 chance price will be there. See what I mean? So the seller of the put the odds in their favor. I like to do that. I like to do it in slightly less volatile stocks than this one, but this is a decent enough stocks at this level that I may be tempted to do that. If I'm tempted, but I'm still a little bit worried, I would employ what Jonathan mentioned earlier, a credit put spread. I would sell it. I would collect $1.50, but I would give back some for peace of mind, at least for the next couple of days. Maybe in a day or two, I change my mind and I sell this out and leave myself with this one to increase the amount I've collected overall. So temporary protection until I see what happens in the next couple of days. I think this week is going to be very pivotal. This week is a short week. Short weeks bring a lot of drama. Don't ask me why. Think back. Every short week we've had this year has been total drama. So we'll see what happens this week. So this is a credit put spread. You've also heard it called bull put spread. The strategy is not complicated. What's complicated is how it sounds. But how do I approach this? I share the trade setup. I go through, okay, what the world looks like. I go through, first I say, here's what the S&P looks like. What is this? Tesla, okay. Here's what the S&P looks like. Here's what can happen with the S&P. Within that, here's what Teladoc looks like. Okay, so this is a weekly chart. I'll go to a daily chart. I'll say, somebody mentioned inverse head and shoulders in Facebook. This is looking like one too. So Teladoc has failed so many times about the same level. So if it gets to 78, I think it can get to 100 plus. That's personal, but it's not going to be a straight shot. So then I'll go into a more granular look. All right, so let's look in here. It does have support here. So maybe it falls to 63 and then it bounces back up. I'll see how it handles 71. All this I will cover in a 15-minute video. And then I'll say, my thesis is to get long in a way that I don't need a rally by selling a credit put spread. And if you remember, I mentioned the $50 mark, right? 50 is right here. Look at this. I had no idea we were going to come up with this 50 being this flat. I mean, there's nothing below it. I mean, what did we just do here, people? Okay, so this is a viable trade setup. So if I sold the put here, it means the stock can fall 24%. I wouldn't lose anything. On paper, my trade would be losing. But if I really wanted to own the shares, I'd let them give me the shares, and then I start losing from there. I wake up owning shares, and then all the losses will disappear, keep my money, and then I $1.50 lower, I would break even and then start losing below that. But anyway, so I would then say I can buy shares, I can buy calls, I can buy call spreads, and I'll say I don't like either of those two for me, but they are viable for somebody that likes to do that. And I would say the two methods I would use is either sell a put if I want to own shares, and the other one is to sell a put spread, and I would show how I would do it. So somebody new would see it, and they would go in and practice. Most platforms will allow you to do paper trades. If not, there are platforms out there that require no money to open, and they allow for paper trades, at least for like a 90-day period or something. So practice. Get in the habit of doing the trade, come back and ask questions. I did a paper trade, it didn't quite work out. I'm in trouble with it. How do I save it? Okay, thank God it's a paper trade. Let's fix it, and let's tell you what you did wrong. So, and then once you get comfortable, you do one contract, one. So in a spread. So then if you make a mistake, you either make $100 or you lose 400. At least it's a manageable mistake, right? And then that's real life adrenaline kick in with the trade. And then when you get comfortable, you increase the size, 2, 3, and then you find a set size and you don't push it. I have many people who start with 1, 2, 3, they get to 5, they start doing 10s, and then suddenly they make 40. Well, things change. Suddenly you're visible to the market makers, especially if it's a thinly traded stock. If the emotions change, because suddenly a mistake is going to cost you 10 grand. Different mentality kicks in. Okay, so Teladoc short term, I also see a head and shoulders here. So there's risk this week. If they fall below 64.5, they could come down to 56 very easily. So you have to recognize all of this. Anyway, so one step at a time. Practice, practice, practice. Once you get comfortable, you jump in. So why do I have the chat room? Because in the chat room, let's say you read it, somebody pops in. This is the chat room, incidentally. And this is Red. Ice cream person is here for Nick. Yep, that's because I just did a video, and the ice cream person went back there. What was in the background of my house, so that's pretty funny. So I just shared the strategic market update video for the week. It's about 10 minutes long. It tells of the opportunities and the pitfall, including this information from the earnings coming up. Earlier, I did the Sunday video. This has 155, I think it's more, charts with the spreadsheet. If you click on this one, it will open this. That's a spreadsheet with all my notes and all the potential trade setups that are here. And you click on this, you'll get every chart with it. So what kind of charts? You asked for these charts. These came from you. I mean, these stickers, they're Teladoc. It's what the people asked for. Somebody's asking for CLF, which is the futures contract on oil. Somebody asked for CL. I don't know if they meant to ask for Colgate or the CLF. I'm not sure. So I gave both. Everything is on here. This is an Australian market, FMG. There are a couple of Australian markets, one German market company, IF something. Anyway, so a lot of homework. So what they do is if they see a setup, a trade setup from last week, this was the meeting for the get together on Sunday. If I share a trade setup from last week, then somebody would come in and say, I don't understand. What did you mean by this? Or I tried to do this. It didn't fill. The premiums are weird. That's what the chat was all about. And they're here all day, every day, even on Sundays. And they're chatting. And they have all of their setups in Pro. So Pro is always open. And you can set it up however you want to. I closed them because my computer was getting stressed. I didn't want all the information because my windows are like super busy. So I closed everything out because it's data flowing through and I wanted to thin out the stuff. And my computer was geeking out on me, even though it's brand new Ryzen 9. So that's how much stress I have on it. All right, so that's the idea. We discuss tickers. You ask for tickers. I find trade setups within those tickers you ask for and some that I like. We try to take trades. I try to share them in write-ups and videos. We discuss them, how they're progressing. And intraday, somebody who wants more, I created the most exciting part of everything for somebody that actually joined, a live room where we discuss everything live while I'm sharing my screen like you're seeing now, only with about 4 tabs of charts. I would say 20 charts open at the same time. You can pop in and out. Not everybody can be there. So the concept is to learn as much as possible how we can make these spreads work for us. I like spreads in this environment because we are guaranteed nothing. The idea is that the S&P is still so high that we haven't even started a correction. Look, this is a monthly chart. Is this a bearish chart? Is this a chart of something that's corrected? No. So if we're going to correct, there's plenty to give back. This is the pandemic, for crying out loud. This insanity. So just if we went back to the pandemic, that's a 26% correction. If you sell puts willy-nilly, even in great stocks at great level, suddenly those great levels are buried deep in the sand. Like Teladoc was a great level, like 40% above now. Here it is, back in the pandemic hole. PayPal, same. Square, also. A whole bunch of great, Roku, a whole bunch of great stocks. So to leave room for error, I prefer suggesting credit put spreads. Exceptions can be made, but in general, a credit put spread is a better way of taking an aggressive stance with mild consequences. So you know at any point in time, if everything goes to zero, you know exactly what you're going to lose. That's the idea of it. Also, we can do iron condors, which we haven't discussed yet, but they're pretty cool. What was the ticker we were looking at? Tesla, where I pasted the piece of paper. Yeah, one day, hopefully. Where is it? No, tell me. There it is. Okay, so a credit put spread. Let's see, can I annotate? Let's draw. So I mentioned 50-45 at, ooh, purple. Where'd that come from? So I basically sell this one and buy that one. The net effect, I'm going to say 70 cents. Air math. Don't quote me on that. And now I'm long. So if I do 10, I collect $700. I'm risking 4,300. But if you think about it, let me walk you through the logic. You're saying, whoa, and I'm telling you, it's a great return. It's like air math. What is that? 17% yield on risk. So the alternative, you take $4,300, you spend it on calls or call spreads or shares, and you need a rally to win. Now, if you're holding shares, you can wait forever. But if you're not, you need a rally to win like right now. Otherwise, you're going to lose money, right? This is the same thing. It's risking $4,300, except you don't have to pay it. You collect money and you wait. And you have an 85%, if not 88% chance of success. And you don't need a rally to win. In fact, you can drop 20% and still be fine. Which is better? One, you spend the money, come on, go. You didn't go. Or collect money and go play whatever you play. Go fishing, we'll go walk the dog and come back to see if it won or not. I prefer the second option. So what's an iron condor? Now, the iron condor this is called a credit put spread. It's a put and it's a spread. It's two things. And it's a credit. You collect the credit. I like this terminology, credit put spread. Sometimes they call it put credit spread. Sometimes they call it bull put spread. It's the same thing. You're collecting credit to sell a put spread. And you win by having price stay above that, at or above that on expiration day. Now, the opposite is a credit call spread. By the way, this is not a trade alert, although it's a viable trade. The credit call spread is selling a bearish position that does not need a drop to win. Now, this doesn't look good enough because I didn't go high enough. I cropped the picture too short. So I'll show you this is definitely not a trade. This is not a viable trade. I sell a call and I buy a call above it. So when I sell a call and I buy a call, that's also a credit because I'm selling more expensive than I'm buying. And that also is a credit spread, except it's a call. So it's credit call spread. It's a credit That's based on calls, and it's a spread. So taking both is called an iron condor. What do I need for that to win? I need price to be between these two on expiration day. In 40 days, I need price somewhere between these two. That's why I'm saying this is not a valid one. That's way too close. I would go higher to a delta that's 0.13 up on the call side. I'll go get it in a second. Actually, I'm going to do it. Stop looking at this. There we go. Give me a minute. Whoop, I need to get my ugly mug out of the way first. There we go. Where is it? One of these days, I will get the handle on this stuff. Getting a hot flash. Where is it? Seriously, where is it? Clear everything. Clear all my drawings. Paste. Nope.
But I mean, just while you're doing this, Nick, with all the fancy names for all these trades, it's basically, you know, when we're talking about a spread, it's just two contracts instead of one contract. And when we're talking about an iron condor, iron condor, it's just two spreads instead of one spread, right? So it's not it's not magic. it's just two spreads on different sides.
It's the same thing on two sides. So it's the same thing on two sides. So the concept is the same. It's opposing in nature, but it works in the same fashion. You take a risk and you give yourself a buffer zone for that risk. And hopefully this will work. There we go. All right. So this is the whole sheet that I had stopped right here earlier. All this for me to get that. Okay, so we were talking about one spread down here. And then the other spread, I mentioned that this one has a low chance of going against me. I want to find an equivalent to that low value up here. So it looks like somewhere on the 90 or the 95. So it would be these two here. So these two. Yeah, these two. So I would collect the credit for selling this spread. I would collect the credit for selling this spread. And all I need is for price to be between these two things in 40 days. That's how I win. So this is called an iron condor. Selling a credit put spread, a bull put spread, selling a credit call spread or a bear call spread, not needing a rally, not needing a fall, just needing it to be ranged between the two, and I win. Ideally, 3 weeks is pretty good. 40 days is doable if there's no earnings report. If there's an earnings report, I do not do this. The earning is just too much of a wild card and I have no advantage. If I was selling a strangle or a straddle, I have an advantage. In this case, I don't. Some people say, oh, you got to take advantage of the volatility. Well, you don't understand anything about spreads. The volatility gets eliminated because you're doing four things. You're buying two things and selling two things at expensive levels. The volatility is not an issue. But if I was selling two things, higher volatility gives me more money potential. So anyway, in this case, credit put spread, it's a spread. Credit call spread, it's a spread. So it's a two spreads, iron condor. I love those trades because IBM, fairly boring company, fairly stable price action of late. I can throw an iron condor and it works. We did that in Netflix and it worked. I did it in Amazon and it worked to a degree if you managed it correctly. SPY 2-3 times it worked. AMD, I think 3 times it worked. So these are like a week trade. Somebody would pop in. I have one person that loves these things every day. Can you give me I need a spread for Monday. I was like, I don't do them for Monday because you wake up and there's a Monday headline from the weekend. How about Wednesday? Okay, Wednesday will work. Get to Wednesday. I need one for Friday. I was like, okay. So, and I also share a set of 8, usually on Fridays. I have abstained from that of late. I will get back to it because things are a little wild. I didn't want to put new people, and I had a lot of new people. I didn't want to entice any new person to just jumping to deep end of weekly iron condors before they do anything else. Carlisle is asking if I have any specific time. I aim for middle of the day. I want to make it earlier in the morning. So I'm going to be, I think, changing that's why I said I'm going to be working tonight. I'm starting to share at night the video, prepping the next day. So like the other day, I shared 3 or 4 tickers in 2 videos at night saying, this is what I'm looking for tomorrow. I don't know which one I'm going to choose, but these are the setups, these are details. And then the next day I simply send out the note. So then they're ready. They understand it. Maybe they're ready in the morning. They probably take it before I take it. So, and I don't take every trade I suggest, because then I would end up with hundreds of trades open. Speaking of open, the markets are open and they're down 0.2%. So there's no set time, but I aim to be somewhere in the morning. But as it is right now, middle of the day. And sometimes I hold back because of one development or another. Because there's never a rush to get into a trade. We have a lifetime. Okay. So this is the basics of spreads and why they're exciting. The reason I like them because they're boring. Boring is beautiful. If I can forecast the price action, I have no issues taking a bullish and a bearish bet, or one and the other. Let's say I have a lot of longs everywhere and I want to go bearish a stock, I would sell a call spread in it. So I did that for X and it worked out. I did that for Lily. It worked out for about half an hour, and then I forgot that I swore I would never trade Lily again. And sure enough, bit me. So I swear again, I will never trade Lily. It beat me before and it beat me again. So I'm walking away from Lily officially. I wish we can block ourselves from inside our account. I mean, it's been a while since I traded Lily, and now I remember why I don't. Luckily, it was a very small position. Nevertheless, it did bite me. So I did short X, the letter X, and it worked. I shorted oil and it worked, believe it or not. But, very responsibly by doing a bear call spread. So, and I usually leave room for error. Like if I'm shorting something, I short it at a top and I leave room for error too. So most often I do that. Right. So the idea is to find easy layup wins. That's what the goal is. It's hard to find where a stock is going. Like it's really hard to say Apple is going to be at this level in the next 2 weeks. It's a lot easier to say Apple is not going to be at those levels in the next week, right? It's hard to pinpoint where it can go as opposed to where it's not likely to go everywhere else. Find a place in those everywhere else and sell risk, whether credit put spread for a bullish risk or a credit call spread for a bearish risk, or both for an iron condor self-hedged trade. So if the stock rallies against you, one side loses, one side wins, you decide to take the whole thing off, no harm done. If the stock falls against you, one side loses, one side wins. If you decide to close the whole thing, no harm done. So the yield is incredible, is in the 20%, and you're agnostic the direction of the move as long as the range survives. So there are little tricks that we use in order to pick ranges that are statistically likely to win. And the secret is to know what the market makers need. Is there a popular quote that amateurs open the market? There is a popular quote that amateurs open the market and professionals close the market. I usually hear amateur hour in the morning and at night. I don't know what they mean. So the idea is, if it is amateur hour, I want to play, because if I think I'm a better than an amateur, I think I'm going to win that game. That's why we won late every time we tried, most often, because amateurs don't see what we see, and you can take advantage of them. Nick, do I use Fibonacci? Okay, here's the good question, Lee. Good question. So I am an engineer, mind you. I haven't told you this yet, anything about myself. I'm not from Wall Street. I'm an electrical engineering. I figured all this stuff out on my own. I've not taken one options class. I've learned everything by trial and error. I was here from the beginning in options. When I started trading, there was only like 3 tickers. And then we had 9 companies, and then suddenly 20 companies. And then now we have weeklies, and soon enough, I believe the S&P will have daily options expiration at the end of April, early May. So now we have 3 times, Monday, Wednesday, and Friday. and they're going to go to daily expiration. That's going to be glorious, by the way. And somebody's asking here, I didn't see that UNH question, so it scrolled off when I was talking. Do I use Fibonacci? Here's what I'm going to tell you. All the tools that you have out there, that's where I was going with my comment. I learned all my tools on my own, and I'm going to show you my chart. There are hardly any tools on it. Hardly any tools on it. So I'm going to clear everything here. Everything I have is hand-drawn. So look, I'm going to hide all the drawings. I have one tool here, that guy that draws patterns that I don't know how to draw. I know how to use them, but it's an expensive piece of software that draws patterns for harmonic patterns. So I use, first tool are my eyeballs. I look left to find the important levels. Like right here, I'm looking, what is this, Teladoc? I can tell you that this level is important and this level is important. And then I drill down. Okay, I need more information. I get closer. I see, okay, this level now is important. And this level is super important. Actually, this one right there would last a ditch effort here. If I'm trading faster, I go down to here. And if I'm doing the SPY, we go down to 30-second charts during the day because we see things other people don't. Okay, like here, I would start getting long this one at the bottom here because of harmonic patterns and internals. So do I use Fibonacci? Yes, indirectly. For example, when this harmonic trade plays out, the machines will hunt the Fibonacci level going backwards. This will be target 1, this will be target 2. So you need to know this. Now, how do I use Fibonacci? I'll tell you very simply. If you are looking at the rally in the S&P, this was the Fed meeting 3-4 weeks ago. We had an 11% rally nonstop. We had one red day. We haven't even given back half, right? So halfway is somewhere around here. I'm going to eyeball. So this is the head and shoulders. So I bet you we're going to have a little hiccup this week. Whoop, drop to, I said 436 is the target from that. See, target 1, 434. Now it's 434.77. So let's say 436 is the target of this drawdown. And I will buy the dip there. And that would be about 50% of the retracement. So 50% of what? So if the rally's, whoa, from here to here, that's 50%, 438. So we're in, I told you, everything is hand drawn. So these will make sense if I go to 15 minutes. Now it's getting clearer because I leave a lot of notes for my peoples. Whoops. So they left this on the table last week and now they must hold. This was a nice call right there, right? This was an important level. We're going back into it. So everything comes back into view. This is not extended hours. Extended hours, I believe we're drifting lower. Anyway, so yes is the question, the answer. But it doesn't matter whether you use Fibonacci or not, whether you use ADX. ADX is an excellent indicator. I don't use it. Whatever you use, it's going to tell you the truth, whatever that truth is. So you find the tools that work for you. If ADX is not in my toolbox, I will consider adding it if I need it. I don't think I do. I have excellent simple tools, and I added 2 excellent tools this year, and I'm good. As soon as I need another tool, I will add it. So I added 2 tools. The one is the harmonic tool, which I'm still a baby at, but I've nailed using it very conservatively, rarely been wrong on it. And another tool that gives me algo, which I can't stand this word, but I find myself using it because that's what they call it in the tool. So it's algo. What is the machine doing during the day? Are they in the options? So they calculate how the option orders are coming through. Even though I don't believe in it, it doesn't matter. The machines believe in it, and that's the only thing that matters. And it's giving me divergence entries and exits, and they've been foolproof. So those new tools I love, but I don't need them. I can trade my style without them. They add a short-term layer that allows me to profit from my guys and gals during the day. It's been phenomenal. So yes, I do use everything and that I need, but you can use whatever. In fact, if you're good with ADX, I encourage you to pitch. Like I have people in there that use stuff I don't, and they know their stuff. Like somebody is a very diehard volume study person. And so they know how volume goes through, and they can forecast if the buyers are running out of steam. I have one person that does candlestick studies, and some people that are just, they must have 16 monitors and they're just all over everything. So if you're good with ADX and you have you just want camaraderie, just jump in. We would love to have you there. There are no jerks, I promise you. I had one incident and we've resolved it since. Nobody is judgy. Everybody is somewhat open to the other side of the argument, and they're getting more comfortable sharing their own ideas. When you get comfortable to where you say a trade before you pitch it, going in, nobody is going in and say, I just won. And I don't let them say that if they didn't actually say their entry too. I said, if you feel like boasting, direct message me. I don't mind listening to your boast. But for you to pop it into the chat room saying, I just won, and you didn't post your entry, not good etiquette. So it's a good environment, is what I'm saying. It's a good environment. I encourage you to join us, especially if you know what you're doing. As far as UNH, you want to ask me again so I don't have to scroll back, I can do that. Have people who make the calls of what they are doing, is it regular? Yes. The fast trading people, they're doing it all day, in and out, in and out. I have 5 people that are unbelievable. They whiff every once in a while, but they're confident enough to actually say long this at that time, out, long this, or short that, out.
Well, and if
I have futures traders, I have straight up options traders, straight up equity traders, all kinds.
And if someone's humble enough to share their trades with you and the rest of the group, even when they're not experts, it just increases the learning speed, right?
Oh, yeah.
Like if you can share the specific contracts that you want to trade and why you want to trade them, then that just benefits the whole group as well as each individual within the group.
Exactly. So, and here's the way I say it. If you are comfortable enough to pitch your idea, you become more accountable to yourself. In other words, if I'm alone, I tend to take riskier stuff I shouldn't take because I know no one's watching. But if I'm sharing it with a whole bunch of people, I better cherry pick. I'm not going to pitch crap. So and FOMO. If you want to avoid the FOMO, join a group. I'll tell you why. So you see the chart right now. I don't know if you can see that. Hopefully it'll work right now. If you're watching the futures right now, let's say this is an open market day. If you watch the futures, you get the urge. You will just get the urge right now to buy puts. Oh my God, you're falling, you wait. Oh shoot, man. No, we just broke through. No, that's not where you buy puts. That's the market maker trying to shake you out. And wait for the bounce. If you really need put, buy them somewhere up here. So we are here to avoid these mistakes where we get short here, we get long here, we get short here. That's what the market maker live off of. Like somebody that got to here and just started buying calls here Friday, they made a mistake. Same. You don't buy calls going into prior failures. We're here to stop you from making these mistakes. So my job is to pick levels that are meaningful. Like tomorrow, if we get to anywhere near this number right here, I would say don't start longs here. Don't start longs here. Book your profits if you got them and re-engage higher because you're going to face sellers. So what you don't want is a bounce and then a fade, which will come, and then you lose this one. You're going for a ride, a big ride, as big as this, all the way down. So, but I told them about this 2 weeks ago when I saw the SPY daily chart have a T1 target of 436. Somebody said, really? It was like right here, 436. I said, not my word. This is what the math says. This pattern drew itself based on historical math patterns. And it says, based on this, starting here, look for a potential fade. So it doesn't say go short. It says start looking for a short. And then we get this candle. And I said, look, those are not good starting candles. When a candle reverses so quickly, it's bad news. So yeah, we can find support here. But if we fall to 436, in this case, 435, that number keeps going lower. It's not a surprise. We knew about it 2 weeks ago, a possibility. And now the internals are matching it too. So this is regular RSI. This is something called the rate of change. This is something called amplified RSI, which is kind of like this one, only with a special sauce from these people. So you need corroborating evidence. If you do the ADX, you would add the ADX here. I don't know ADX, but maybe you do. So what I would have done is add the ADX here. Look, it's one of my favorites, but I've never used it. Let's see where it is. There it is. Okay, so the ADX is saying good news, it bounced off of it. So it's not the end of the world. Let's see what tomorrow brings, basically it's saying. But if you fall below this line, I've never used the ADX, but I bet you that if you fall below this line and start slanting down, any pops into it will be sold by machines aggressively. So that's another way. I don't mind it. Maybe I'll start looking at the ADX. Thank you, whoever mentioned it. So the concept is the same. I've never used Ichimoku. I've never used Ichimoku. I bet you I can bring Ichimoku in here and make a smart comment about it. And if you're an Ichimoku person, you can probably tell me, no, you're full of crap. Okay, so I don't have anything from the Ichimoku. It's going sideways on this time frame. So there's no clues from it. I'll go to 120. On the 120, the cloud is above me. That can't be good. Rallies into the cloud, I want to fade. I don't start buying calls going into the cloud unless I have corroborating evidence that I have support coming up and the battle is brewing. So whatever you do, use more than one set of tools. So you can get to the same conclusion from 2 or 3 different ways, then you get more confidence in what you're doing. All right, let's take a couple of tickers. Is that okay, Jonathan?
Yeah, that's always fun. Let's do it.
Okay. So Tony, I have a 520, 530 UNH spread. What is the spread? Credit spread, debit spread? Should I look to take profit sooner than later or try for the full $5? First of all, it's the full $10. It's a $10 spread. Yeah, I saw it. Oh, it's a debit spread. So let's go to UNH. Woo! So you bought a debit call spread. Is that the correct thing? 520, 530. Okay. So first of all, he's not really asking a question. He's saying, look at how well I did. Good job, by the way. So Tony bought a call here and sold a call here. So he bought a call spread. Why would he do that? A call all by itself would have been $1 bazillion for this stock. So he lowered it to bazillion less, quite a bit, making it manageable. So he probably paid about $4 to $5. I have no idea how much he paid. I'm guessing here. He probably paid $5 to get $280. Okay, excellent. So he paid $280. So at the time, his delta was about 30, which was pretty good. And then the stock rallied in his favor. If he had just bought a call, he would have made a lot more money, but a lot more money at risk. But now he's made a lot of money. So the maximum value for this is $10. So he paid $280. So he stands to turn $280 into $1,000 with one contract. If time runs out today, this would be $1,000. This is for 414. So this expires on Friday. So his question is, should he stay in it to squeeze the most value out of it? Let me make that decision for you. No, actually, I can't make that decision for you. Let me tell you what I would do in your shoes. If you've done more than one contract, you're not going to be upset with yourself if you took off one or two, right? Or half, so 540, 530. So it's worth $680 according to my clock today. So he turned 280 into $680 per contract. Since he says he'd take off half, he's done more than one. Great job. For me, I'm asking, why isn't it more expensive? It should be more expensive. If there's an earnings report between now and then, I wouldn't even think twice about it. I would take it all off today. You would hate to turn a big win into nothing. An earnings report is a complete coin flip. You don't know what they're going to do. And this looks like it reports on the 14th or the 3rd. I would not risk it. I would book the whole thing. That's me. I would be okay missing out on $3. That's me. You do what you need to do. Can I look at Tesla for buy? I could. I like GLD to move to 185. We did an iron condor on the GLD so well, Lee. You would have been so happy with it. You would have been so happy. So the GLD is the ETF for gold. When gold rallied somewhere up here, I said, this is BS. I'm going to short it by selling a call spread. And we did. Worked like a charm. The next day it collapsed and then it fell into support. I said, I don't hate the GLD. I just hated the price action. In fact, let's go long by selling a credit put spread. So we sold a credit call spread. We collected the premium. Went to almost maximum value of profit when the stock fell. Then when it fell, I said, I like it. Let's go long. We sold collected a premium below. So we had an iron condor after the fact, which was a complete win. So I would repeat it. You want to go long the GLD. I don't see a reason to technically until it breaks out of this one. So from a trade perspective, the closer it gets to that, I'm less inclined to buy it until it gets above that. These two are death. So you have to pay attention to these two. This is no bueno. Technically speaking, there's no obvious entry point until you need a catalyst. This is a mini catalyst. This is a bigger catalyst. Until then, they're heavy resistance. You also have to look what the dollar is doing. Sometimes it influences the action there. Okay. Tesla really for a buy. Well, I'm rarely buying Tesla. I'm always trading it on the long time. There's nothing that says buy Tesla here. In fact, it had two breakdowns on Friday that signify 965 or 945 targets. So if you see it hit 945, then consider starting a long for a trade, tactical trade. There's no investments at these levels. Tesla will surprise people just because it does all the time. So according to these shorter term trade setups, there's a drawdown in Tesla, 965, 945, and 920. I personally, if it does come down to 930 or lower here, I'll put the alert right now to start looking at it. A breakout from here could have brand new high into it. I don't know, 13, 1400 if you take this out. These are massive fails, but I think if you take this out, yikes. If you take this out with force, I don't think these will stand a chance. It will go boom all the way up there. NVIDIA, I would wait. I'll tell you why. So my theme for my week video that I sent, the video for the prep for the week, is take cues from the cues. Take my cues this week from the QQQ. I'll show you a picture. So you tell me if there's risk today or not. In fact, it's playing out right now. 120, 15, 60. Okay, it's playing out already. So this was the chart on Friday. This is the NASDAQ futures. I said, look at this nice clean line. What are the odds this line holds? If it doesn't hold, we're coming to here. So that's a 2% drop by Tuesday. They're already dropping. This is 15 minutes delayed, so it may have bounced already. I don't know, but it's already lost the line. They're going to bounce, trying to recover it overnight. And we'll see where they're open. If it comes up to 14.4, it's going to find resistance. So here's my concern. This is taking cues from the cues. So if it bounces and it finds sellers at resistance, it comes here and retest the low that we end up doing tonight, wherever they end up doing it. You lose it, then you're going to do one of these. Comes to what? The same message. And then I'm sure there'll be a cluster of support, rinse and repeat. So now sellers are in charge. They're selling rips. So pop, sold, pop, maybe sold. We'll see. This is just me thinking out loud. Okay. So in that environment, you should then look to what you should buy and when. So if the QQQ is doing this, everything tech is going to be falling. So what do I think of NVIDIA? A great company. Then it comes down to timing. Are you trading or are you investing? AMD has a sharp line it needs to hold. AMD cannot afford a blink. And if AMD blinks, it goes to 65. Yes, you heard me right. And I love AMD. So I'll show you. That's why you have to be realistic. Look at this setup. They have all these here. I'll take out all the drawings. Look, bounce, hard floor, at hard floor. How many times is that floorboard going to hold? Look at this. You poke holes in that board, you're going whoosh. This is a weekly chart. Does this look like a head and shoulders to anybody? Yeah. So if this neckline of this giant head and shoulder-ish pattern is broken, which is a tall order, it shouldn't be broken. It was hard resistance so long, big breakout, too big. Hard floor, bounce to the moon, bounce, lower highs on this floorboard. How many times is that going to hold? And if it doesn't hold, the drop is this big. It will get you in the 60s. And the problem is this was absolute crap right here. If you look at the daily chart here, that period of time back there, where was that? This, look at this. Two giant gaps. They never came back to it. Big head and shoulders here. It held. In May of 2021, we had the same. Wow, a year ago, folks, a year ago. Look, head and shoulders, multiple shoulders. Same scenario, hard floor. It held and built this entire thing. Now, again, hard floor. It could hold. And guess what? AMD has a seasonality with it. It says buy it around April or something and sell it before the end of the year or something like that. That's how it works out over the long term. So AMD is a make or break. A tactical trade. If you get long, get out quickly if it fails. Okay, Docu, I like it long term. I don't like the company telling me how crappy they are. That's what I don't like it. So it's like, you know, my wife ate crickets yesterday. I was like, did they run out of chicken or what? Why are you buying crickets? I'm pretty sure it was an expensive plate. So why do I need to bother with Docu when there's better stocks out there? So yeah, Docu on paper looks pretty, get it? Docu, PDF, paper. So in theory, it's a good company, good concept. It's with the trends. Everything is digitized. It should be great. I use them. I don't pay them anything, but I use them. Then the company comes out and says, oh, we're going to suck. Oh, by the way, we're going to suck even more. And then, okay, so it's hard enough to actually battle all the haters of ARK and the companies that look like something she would buy. And then you come up with your own crap like SoFi on Thursday. Anyway, it does have support from here, which is the pandemic. So if you use common logic, it's back to pre-pandemic. So it's like the whole thing never happened. From that perspective, it's hard. It's too late to panic out. Matterport. Jonathan, feel free to interrupt me anytime.
Well, just really quick, we only have 15 laptops left. So congrats to everyone who joined the program. Nice. And I'll show everybody, before I get off tonight, I will show everybody where to find everything so they know where to follow you tomorrow morning. But there's only 15 laptops left at that 50% off rate. For everything that we've been talking about here today, you can follow Nic day in, day out. Even if you're a part-time trader, you can get one swing trade pick per day and ask Nic questions any day of the week in the live trading room. So stay tuned. I'll show you where to find everything, but don't miss out on getting the free laptop, half off of everything. And Nic, I know you're working overtime here. So whenever you have to go, I totally get it. I think everyone here can agree that
I can give you about 10 more minutes, and
okay.
I really need to go to do some stuff. So I will answer some of these questions right here. One of them is important. So MTTR, be careful. You do have must hold levels. You have higher lows. That's good. This is a trigger higher if you can ever take it out, 9.4, but don't lose this one for sure. If you lose this one, it could trigger. So if it bounced off of 6.47 one time and it fails and it comes back and loses it, I don't think this holds. So it goes to like 4. I'm not saying it's going there. I just want you to be cautious of that. Now, somebody mentioned leaps up there, Eric. Ford. I mentioned Ford. I was a big fan when it was $7. I said the great American company, they're going to get their act together. It's going to go higher. And it delivered a huge win. You know, if somebody held it all the way, I certainly didn't. They made a lot of money. And then I had a whole bunch of people that did hold it all the way. And they were up here asking me, they started to get too cocky with it. We're going to the moon. I was like, people, this is overdone. Ford sucks as far as financials. The company is good. The spirit of it is great. The financials are horrific compared to Tesla, which used to be the joke, right? So Tesla is like 3 times more efficient, maybe twice more efficient on creating gross margin than Ford is. Ford sells a lot more, has a lot more revenue, like 130 billion versus 59 billion. But Tesla generates almost as much gross profit in billion, like 13 versus 15. So Ford has a lot to learn from that perspective. It's inefficient money-wise. So they say it's all-time high as like first, that's proof that you don't know enough about charts, that you're saying that this is all-time high. This is Ford. So when you buy it up here, you just bailed everybody out that's been stuck for 20 years. 2001, they've been stuck. You just said, here, get out. I'll take your losses. And then I said, I wouldn't touch it until it goes back to like 13, definitely under 15. That's what I said from it when it was in the 20s. Not because I hate it, because I hated the rally and the mentality. Everybody forgot what got it there. So I charted it one line at a time. And you tell me if we were accurate with the chart or not. So from here, I said, if a bounce comes, it's going to find resistance. It did. It didn't even go to here. It just went to here and boom, bounced, tried again. I said, they have a decision to make here, bounce up or come back and test the neckline and lose it. And guess what? They lost it. So now they either come to here, but they probably will bounce one more time into 16.5 and fail. And if they fail, they'll come back and finish this job, maybe even down to here, because that's the head and shoulders that they lost up there. So I would not touch Ford for the long term. Now, Eric mentioned leaps. Maybe it's time to mention something about them. They're not magical. Leaps are just regular contracts that simply have longer time on the clock. They don't have special properties as far as I'm concerned. They have they just have more time on the clock. So when people say leaps, they tend to think in the money leaps. So for Ford, in the money leap is like you buy the $12 call. So it's in the money, meaning price is already above it. So what's the advantage there? There's advantage and there's disadvantage. The advantage is that it has a higher delta, right? Because it's in the money. Well, if you remember, I said the definition of delta, it's the amount of money it moves by the move of $1. So if the delta is 90, it's almost 1-to-1. So whatever happens to the stock happens to the option. So then it behaves like a stock. So on bad days, options can be down 30%. This one would be down 15, 12%, 10%, 7%. It will behave like a stock. If the stock is down 3%, the option would be down 7 versus 25 of it being out of the money, because it has a high delta. It has a high correlation to the actual stock. So it acts more like a stock. It's mostly stock and some time element, hope. So they call it intrinsic and extrinsic because it sounds fancy. So think of it that way. It's not a magical contract. It just it's slower moving. It's good and bad. If you get a pop, you can't profit from it as quickly because it acts what? Like a stock. If you buy a call and you get a pop, you'll make 300, 400, 500, 600 times your money. Well, you can't do that if you're in the money. You make considerably less. So they have pluses and minuses. It all depends on what you're trying to do with them. The advantage of having in the money leaps is that you can sell covered calls against them every week if you're good enough. And by the time 6 months have gone by, your cost basis is so much lower. The leap, I think the definition is a year. I'm not sure. You can look it up. MULN, I did look at it for people in there in our group. So you see how you're hungry for tickers? Wouldn't it be great if you had a place where you can do that all day or whenever you want? You just pop in, or at least 2 hours on Sunday. That's what we do.
Or I'll show them your spreadsheet with 155
Yeah,
tickers
I
from this
started with
morning.
that. This is all of them right there. Is MULN here today? I don't think so. No. Monster in. So MULN will be in here. Invita is in here. People know OGN. Oh wait, what the hell is an OHI? Anyway, SO. That's the first time I've seen that one. So I can't remember what that was. So somebody comes to me with a stock like this. This is a monthly chart. So this is an all-time high. Every tick is 1 month. And like, I'm not sure what you want me to say. Yes, buy it as an investment. If you're looking to short it, sure. I mean, I call these THTH. They're too high to short and too hot to short and too high to chase. So I can't do anything with that. So MULN, you have strong resistance and strong resistance. I wouldn't get long unless you're buying off of support, which is a viable trading strategy. It's fallen into support somewhere around 1.8. There should be support. These candles are supportive, but you have a hole here and a hole here. It's kind of a messy tape on a daily chart. Sounds like if you're actively trading, you need to get granular. 2.15 needs to hold, otherwise you're going to 1.8. This is resistance. This is resistance. It's easier to fall than to rally from here based on the chart. But you need to do homework on the company itself to find out whether it's worth your effort or not. What do you think of Tesla Leap calls 1,000 strike? Okay, you didn't give me the one point that is most important here, Cindy. Can you guess which one it is? So I don't have to look it up. No. What are your odds of success? We'll leave it with that lesson. There you go. Lesson on the fly. Venus, TSM has special circumstances. It's a good company, but the fact that it's Taiwan, this is Taiwan Semi, right? It might have some issues relating to China. And TSMC reports this week. Is that the same company or related to it? So it might have, yeah, so it might have some, Habib, join the group. Anyway, Cindy, I'm waiting on you. Do you know what the delta is? I can help you. I want you to do your homework. This is your first homework assignment. I'm not putting you on the spot. Trust me. That's what we do all day. Nobody's upset when I say this. I can bail you out. I just want you to look for it while I'm looking for it. This is, you said, 434 days, 6/16/2023. Looking out in time. So what Sunny is asking is for a contract that is so far out in time that it has 432 days on the clock. Oh, okay. So never mind. The price is right there. You don't have to look for the delta. They're thinking about buying a call at the money, and it will cost $287 for one call. So that's a lot of money, but it's a lot cheaper than buying 100 shares of Tesla. So for that, so you spend the money out of pocket right now. And Senny, if you need to do this, I would suggest you immediately start selling calls. So I would make it into a call diagonal right away. If you don't know what that is, it's a super easy way. In fact, what's Jason's title at your company, Jonathan?
Chief Zinger. I think he calls himself, I think, Chief Zinger. But yeah, he's CEO and founder.
Chief Zinger, Jason, was on one of my calls like you, and he owns Tesla stock. And he goes, what can I do with my stock? I told him we should sell covered calls. And that day he went out and sold the covered call, or a bunch of calls. I don't know what he sold. He made, I forgot the number, $2,500 in a week out of nowhere, just because he owns stock. And it's so expensive that if you're willing to pay $287, you should lower your entry cost. For example, let's see, I'll give you an idea, a specific idea what it would be for January, for this week. Let's take this out. April, not January. Okay, here's a number for you, 1,200. So you can collect money for selling calls in the 1150 area. So 1140, 1135, you can collect 2.5. So whatever you spend, 288, you immediately collect credit of almost $3, so $300 in credit against your purchase. And by Friday, that $300, if Tesla is below 1135, it goes to zero. You repeat it and sell it for the week after, a little bit higher, collect another 300. Repeat, 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 repeat. In fact, you can sell one statistically viable to die for maximum gains at 1090. So if you're okay limiting your profits for a week at 1090, you can collect $600 for selling that call. But if Tesla goes to 1090, you have to close the whole thing in order to, you have to deal with that. But it will be a less profit, not a loss situation. So that's what I would do. Okay, folks, I'm going to have to sign off. And by the way, now the S&P is bouncing, the futures, but this is where I expect some sellers to come in. Let's see if they do come in. They recovered half the dip they just did while I was talking to you. But because you guys are so nice, it's bouncing a little bit. But overnight, you cannot lose 4466.5 in the S&P futures. That's the ES E-mini, they call it. If you do, then tomorrow is going to be painful. We're going to lose about 40 points. I appreciate your time. We had hundreds of people here. Jonathan, good job bringing so many people into one room. Hopefully, Mr. Shaheen, Christian, come on in. So I promise. Here's the thing. I don't think you mentioned it. Do they know they get their money back if they don't like it?
I didn't mention that. There's a 7-day money back guarantee, so you could join tonight and have access tomorrow morning to the full trading room, all the picks and everything. Try it out for a full week, and if for whatever reason you don't like it, you think we smell bad or something, we'll give you all your money back. But I'm pretty sure that won't happen. There's just so much value that Nic adds for our group that's far, far beyond the what we charge for his service.
So B is asking if they could sell calls in MULN. No. Oh, covered calls. Yes, you can. If it's liquid enough. I don't know MULN options if they're liquid or not. Just make sure that it's a situation when you sell covered calls, that it's a situation that you don't want to defend it. Quote, I hear this all the time. I sold covered calls and now I'm in trouble. No, that should be impossible. It's not impossible. It should be impossible. But selling covered calls, only sell the calls if you're willing to deliver the shares. If you're not, do not sell those calls, because I see people saying, I got to defend it. I got to buy it back. I don't want to get rid of my shares. They actually decide to take a loss instead of booking a profit. That is insane to me, but they do it. Like, what's the deal? What if you lose your stock? What's the big deal? You turn around and buy more. Nope, I can't lose my shares. I'm going to buy it for a loss. Wow. Said, don't ever sell a call again then. That's what the deal is. Do you determine if it's bullish or bearish based on the volume or open? John, it is a yes. Most definitely you can read. I just told you we made a bundle of money on Friday because I read the volume. The volume. Open interest is more pertinent earlier days, but once the last day of the expiration opens, the open interest kind of goes out the window and it's all about volume. What is your question about calls and puts? I spoke about Ford for like 10 minutes. What was your question? How could I have not answered your question? What was it? Please state it again, Lenny. You're welcome, Naji. Naji, my best friend, his name is Naji. My very best friend. Been friends since we were 4 years old. He lives in Michigan. You have a 1550 April 29 strike. What? Call, put, what? Wait, you bought a straddle? Okay, so what's your question? My thoughts is I don't buy straddles at all, because the person selling a straddle is a market maker. I mean, I need the market maker to lose money for me to win. They sometimes work, the last earnings season, they worked, which they shouldn't, but they did. So whatever reason got you into the straddle, make sure to be honest with yourself on that. And make sure to keep track of your investment. But as a habit, I don't buy straddles. If I had the choice, I would sell straddles every week. Because what do they say about options? Can anybody tell me what they say about options? You're welcome, Ikechi.
Most options
No,
expire
Jason, that's my first
worthless.
live one, so I have no idea. Yes, Mary, thank you. Most options expire worthless, which means the market makers never lose. So you don't want to bet against the market maker. They do work, and when they work, they pay well, but you got to know what you're doing. And I'm not an expert in straddles. Straddles is basically you take both sides of the fence and you need a big move either way, but you need a really big move that surprises market makers. Yes, you want to sell premium when you can, Tony. Absolutely. Yep. So if you think about it, the width of the straddle is what the market makers think the price is going to go up and down. You've heard it on CNBC. They say they're expecting a plus or minus 14% move. That's how they get it. They get the price of the straddle, they divide it by the stock price, and that's the expected move. So why would you bet on the other than expected move? That's why it does work. I don't want to get you out of your position. I just want you to be honest with yourself. All right, folks. I'm out.
All right. Thank you, Nic. Thank you.
Jonathan, I appreciate you because you're going to be late. This is what, almost 9 o'clock your time, and you're going to hang around trying to help these folks to get around where they need to be.
That's what I'm here for.
I have work to do. So if you did join, just pop into the chat room, say hi. Somebody will say hi. If I'm there, I'll also say hi. But tomorrow morning, in the morning, I'll hit you with a plan for the day and links for the meeting place if you can join us for a live chat. That's separate from completely everything else you get, and it's available to you as well. Hopefully you join, try it out. I promise you, you will learn something. I guarantee you, you will become a better trader for being in the group. Whether you make better trades in the group doesn't matter. If you want to be a better trader, I guarantee you results, because we do share knowledge that is so important and is so simple, and nobody will teach you that. Nobody will teach you that. Very few people.
Absolutely. And for everybody in the chat, I'm posting the link there for the deal, and then I'll also post a link for the recording as well. Nic, thank you very much. Whatever you stop sharing yours, or I'll just start sharing my screen.
There you go. Actually. You steal me away.
Let's see. I'm
going to bolt. Bye.
All right. Take care. Have a great night, Nic. And I'm just sharing my screen here. And what we'll do here is I'm going to share with you right now what it looks like on Benzinga Pro. And I'm also bringing back up the various chat rooms so I can still see all of your questions. And so when you join this session, or when you join the group right now with those links, this is what it looks like inside of Benzinga Pro. There's a whole bunch of other tools available. And on the left side of the screen, you have the chat room, specifically the Benzinga Options Inner Circle chat room with Nic. There's a bunch of other chat rooms, but this is the only one with Nic Chahine. And you can see him right here responding to someone else. He gave his market update tonight. And then this is where you would see the video from Sunday mornings at 10 a.m. Eastern time. So you can see this morning he covered 155 companies. So all of you that mentioned tickers that he wasn't able to cover tonight, you would actually be able to fill out a form every Saturday night. He says, give me your tickers early here. And if you click on that, you're allowed to give multiple tickers for him to cover on those Sunday sessions. Then he pretty much covers all of those and gives you a spreadsheet of all of his notes and all of his charts so you can follow along with the video. And he also, on the right-hand side here, he leaves notes on different types of trades. So I always pay attention to these with like credit put spread with stops. CPS means credit put spread. IC means iron condor or credit put spread. DPS means debit put spread. or credit call spread is CCS. So, and for any one of these, you know, he obviously doesn't have every single ticker on here, but you want to check out NVIDIA. You just go to NVIDIA. He says at target from losing 260. Credit put spread is okay for me. Buying calls or call spread is not that great for me. And then I could click into his chart and I could basically copy these levels on my chart if I want to. I could set alerts for myself. So if you are a part-time trader or full-time, you could do all of your homework on the weekends, attend that session live on Sunday morning or watch the recording Sunday afternoon, map out your support and resistance levels for the week, and then just check in a few minutes each day to adjust your positions, take new positions when you get those alerts on your phone or on your computer, and you're pretty much good to go. So this is really going to be your home base at pro.benzinga.com. That's where you're going to log in every day with the mentorship plan. And so when you click on that link in the chat, it's going to take you to this checkout here. And then there's a coupon code that will be pre-applied for you. And you can see that normally this is around $3,400 for the year. You're going to get that for $1,683 for the whole year. I think we only have 7 laptops left. So if you see that code available, then you know that you'll get that laptop. And if it's not there, then we're all out. So definitely get in on that as soon as possible. There's only 3 hours left on that deal. And then you can pay with credit card or PayPal. You click buy now, and then it'll take you directly to Benzinga Pro. And then you want to locate the Benzinga Options Inner Circle chat room. You notice I can click on these other chat rooms, but I want to go up to Benzinga Options Inner Circle. And if I scroll up to Friday, you'll see where he posts the plan for the day. Here we go, Friday's plan. Maybe I can zoom in on all this for you. So I say Friday's plan. And he says, after 3 green weeks, and unless we have a massive rally today, so on and so forth, this one will be red. 2 things stand out today. So he's just giving you an update on the overall market and telling you how that impacts all of your trades. And then this is the link where you would go to Nic's live session. You click on that link and it goes to his streaming service where you can see all of his charts and he's calling out day trades for you throughout the day. He gives you his support and resistance levels for the indices and the futures. And then if I scroll down, he's giving you updates on specific trades. So right here, he's talking about Apple, NVIDIA, NASDAQ futures, the Qs, and then Facebook, intraday scalp op for fast traders. So this is all within the chat room. And he's giving another BABA opportunity. So I mean, and so that wasn't all fully laid out, but now this one, let's see, I'm looking for one that comes with a video and everything. Yeah, so I guess he was sharing a lot more there. Normally, there's one that's a lot more spelled out with maybe a 10 to 15 minute video that goes with it. It varies from day to day which one is a full-blown trade, trade pick. But as you can see here, you might have like 7 to 10 different trading opportunities listed here within the chat room. And many of those are swing trades in addition to the day trades within the day trading room. Let's see, I'm looking at the chat here. Let's see here. Yes, Matt, Benzinga Pro is included. You get all these other tools that are on Benzinga Pro. I know Nic doesn't trade with the news, but you do have our news feed, details tool for charting, financial data, peer company research. You've got high-powered scanners to see which stocks are spiking as early as 4 a.m. Eastern time to 8 p.m. Eastern time. Find low float stocks, high short interest stocks, all that good stuff, and all this other research, these other research capabilities here. And then, as well as an ideas tool, this is really cool, where you can see what Benzinga staff members and other Benzinga Pro subscribers are trading. So I work with James here. He does a lot of crypto. Anne Marie, that's Anne Marie Band from thetradingbook.com. She posts some of her trades in here. Mitch, that's Money Mitch from our YouTube shows. He's bullish on BTU. So you get a lot more with this in addition to all that trading and coaching from Nic Chahine. This is all included with this package that we've got on sale for 50% off today. All right, I'm kicking some spam stuff out of the chat here. Hide user on this channel. Let's see here. Doc, let's see if he had Cat on his spreadsheet here. All right, I don't see Cat on this spreadsheet, so I would have to wait until tomorrow. Sorry we didn't get to your question about the Cat puts, Doc. I know you were very patient. So that was my bad that he didn't get back to you. But thanks for sticking with us today. So I would just pop into the chat room tomorrow, and he could definitely cover your question on the Cat puts. Joshua, any reason it won't let me pay for it? That's hilarious. I mean, sort of. Make sure you check this box for reading the terms of use and privacy policy. It's a 7-day money back guarantee. After that, there's no prorated refunds, and it will renew at the same discounted rate. So we're not going to surprise you with a $3,400 bill in a year. It would renew at that same rate. Also, you might have to like fill in your email address and phone number. But if you have any trouble, just shoot me an email. Shoot me an email at jonathan@benzinga.com. I'll get this all set up for you. Sorry about that, Joshua. Sometimes the computers, they just don't like us. They're like, you know what, screw you. But I'll hop on the phone right after this if needed, and I can help you out with that. Yeah, what kind of computer? It's like a $300 to $400 computer. The best type of computer that we can get for the best price. And whenever we do a special deal like this, then we just wait the 7 days after, and so sometimes it's HP, sometimes it's Dell, but I would say it's good enough to run Benzinga Pro. Probably not fast enough to run, like, if you have the option, you would want another computer to do your actual trading execution and Benzinga Pro. So yeah, I'll just say it's not going to be top of the line, but it's just like a nice bonus. Like, if you were a beginner and you didn't have a computer, then at least, you would be able to trade with this computer. So I would say it might have 4 gigs or 8 gigs of memory. It's not going to have like 16 gigs of memory, if that helps. Yeah, E. Lopez and Birdman. Yeah, I'm here. I'm real. Email me at jonathan@benzinga.com. If you already purchased 7 days ago and you haven't received an email, you can email me, or we also have support@benzinga.com, and we'll get that to you ASAP. I have a form that I can send you to fill out for your shipping address. Basically, you get a shipping address 7 days after you purchase. Akechi, we do not have a desktop application. It's all web-based at this point in time. So that's, definitely on our wish list for a desktop application, but you can access this on your desktop, web browser, mobile web browser, and that's pretty much it at this time. Let's see here. Yeah, thanks for being here, Tony. Take care. Camille, I'll scroll up, Camille. I did not see your messages, Camille. Okay, about trading school with Mark Petrino. So Yeah, the trading school with Mark Petrino is separate. So Benzinga does have other educators that do other programs. If you've been to another webinar or you already have one of those other programs, just email me directly and I'll put together a custom discount for you. Because like the trading school, for example, already has access to Benzinga Pro. So I'll work something out for you personally. Um, yeah. Let's see here. I know, just kept spinning. Perfect. Yeah. So if anyone has trading school and you want to add on the options mentorship, I can definitely do that for you. Um, what about after the subscription? Found Nick's chat room. Can you swap? Senny, you can do whatever you want to do within the 7 days. Um, so yeah. In fact, I mean, that's kind of my job here is to make sure that you know where to find everything. And this is really, like I said before, your home base here within the chat room on Benzinga Pro. And then you would click into the live meetings. Like if I click into here right now, nothing's going to be open, but it's just like this. And you click join meeting. And apparently there's people here that are just waiting for tomorrow, or they just never left after the meeting from this morning. So, but this is what it looks like, except when Nick is on here, you would see his charts. You would open up a chat room, and that way you can ask Nick live questions throughout the trading day and see his charts. So whether that's calling out day trades or talking about the swing trades from this other chat room, that's really going to be where you get most of your information. Let's see here. Yeah, Senny, I mean, just shoot me an email or give me a call. I mean, I'd be happy to talk through everything for you. It is a pretty hard line on the 7 day money back guarantee, but of course, I mean, we want the value add to be obvious for any of our members. So I'd be happy to talk about anything. Again, it's Jonathan at benzinga.com. Or 313-221-9214, and we can definitely figure it out. Um, let's see here. Yeah, Moises, if anyone doesn't want the laptop, just shoot me an email and I can work something out in regards to a little bit of an extra discount for you. In fact, it's 1683 1683 with the laptop. I'll make it 1297 no laptop. So you hear it from me now. I'm putting this into the chat. If you don't want the laptop, I'll give it to you. I'll give you the whole package with no laptop for 1297 for the year versus 1683 for the year with a laptop. Yeah, Scott and Moises, I see you right there. 1297 for the year with no laptop. Instead of normally that would be like 3367 for the whole year. Let's see here. All right, I think I answered all the questions. If I join Nick's options but use it for buying or selling stock, could I ask Nick if I should buy or sell? Does he stay away from stock? Great question, Jonathan. So there's actually a ton of stock or futures traders in Nick's program that don't trade options. The reason for this is technical analysis is the core of his method. So if I'm looking at this whole list of different companies, right? Or if I'm attending his Sunday session for 2.5 hours, I'm basically going to get my technical analysis done regardless of the asset class that I'm using to trade that company. And so, yeah, you could definitely use this to trade stocks. It's just you're not leveraging your capital with options. You're just buying and selling the stock shares themselves. Let's see here. Awesome. Alam, anyone who wants the 12.97 deal, I should have come up with a special coupon for you, but just shoot me an email and I'll send you a link tonight. Um, yeah. All right. And then Rudy, yeah, so Rudy, alum, Eric, awesome. I will get back to all of you tonight right after this. And again, that's Jonathan at benzinga.com. Throwing this into both chats here. Awesome. Throwing this over here as well. Bam. Okay. E, let's see. Oh man, E Lopez, that's awesome, man. I'm so glad that you get so much value out of it. Um, fantastic. How many positions does Nick have at one time? In terms of his personal trades, to be fully, I mean, I don't actually know how many trades he takes at one time. Um, he does differentiate. Like he'll tell you sometimes he'll tell you when he's taking a trade versus he'll also tell you when like, hey, this is a decent trade, but I'm not taking it for this reason. Like maybe he just doesn't like the financials of the company or something. But I'll just leave it at that where he'll tell you like a few times he's giving out multiple trades a day, right? But he's probably not taking most of the day trades because he's focused more on mentoring and he knows he'll screw something up with the trade because he'll be distracted by a question. He's mostly taking the swing trades for himself. He's just calling out the day trades in the chat room. There are exceptions to that, or he'll take a day trade, but he'll like be extra careful to get out of it and take profits early so he doesn't get distracted. So yeah, he's trading a lot, but not as much as he would if he wasn't also mentoring. Yeah, Trader John, that will renew at 12.97 every year as well. If you lock it in tonight, that's 12.97 every year moving forward. So yeah, it's a crazy deal. Let's see here. Awesome, Derek. Fantastic. Yeah. And again, I guess I can show you guys this. We actually have a help site for Benzinga Pro. And there's a whole library of tutorial videos here on how to use the tools within Benzinga Pro. But also, there's a whole library on the options mentorship tutorials. So, what type of trade is best, breakout versus swing trades, when and how to book profits. And then for those of you who are just learning about the spreads tonight, you have what is a spread, credit put spreads, call options, and then I'm gonna add some more videos here on like the iron condors, calendar spreads, straddles, why Nick doesn't sell straddles, or whatever the reasons why you want to be trading in the same direction as the market makers. So yeah, we do have this whole list of videos here from Nick so that you can review some of these basic concepts that we've been talking about this evening. Awesome. I see you there, Chris. I will get to you and the 10 other people about the 12.97 deal right after. And it looks like I'm just checking my feed here. It looks like we do have about 5 of those laptops left. Just so everybody knows. See, Options AI offers some easy ways to place a trade. Cool. I'm not familiar with that one. Then Senny, just shoot me an email and I can set something up for you. We'll just figure out the best solution for you. Scott, Benzinga Pro is included. So technically, this this is like super zoomed in right now. I don't know, maybe that's okay. But basically, the options mentorship plan is the highest tier subscription to Benzinga Pro. So you get absolutely everything on Benzinga Pro, all of these tools, real-time data, real-time charts and scanners, the options mentorship program, and normally you'd have to pay extra for this options activity data, but it's included with Nic's program. So like if I click on Friday, you can see these huge option orders. Where's the total trade value? There we go. So I could see like the $17.5 million order on Google. And you can there's a whole different strategy that you can use with this type of information. But my point is absolutely everything on Benzinga Pro is included with Nic's program. Yes, Trader John, Money Mitch. This is the whole platform that Money Mitch is talking about on his program, and everything is included. Sorry if I sound super nasally. My nose is kind of plugged up, but everything is right here on the Benzinga Pro platform. Oh, this is a kind of a cool tool too. Insider trade, so you can see where a company has multiple insiders buying the stock, insider purchases, penny stock buys, insider sales above 100 grand. And then if you click on any of these, you can actually see the whole history of insider trades for that company. So whether it's a bullish or bearish one, and if it's a buy, grant, or tax situation. So lots of cool stuff to. Oh, and one of my favorites is super simple, is the movers tool. If you've ever seen me on any of my YouTube stuff, this is my go-to. Where like tomorrow morning, I'll look at this in the pre-market and just see what's gapping in the morning, and then just go through the charts really quick. And this is how I, if I'm setting up like a gap and go trade just for trading normal stocks, this is how I go through my gappers and then check out the news on those stocks as well. So lots of cool tools there. Let's see here. Yeah, Mylan, how to use the scanner. So with the scanner, if you have it set for real-time data, so just to double check here, check the refresh rate in the upper left corner. And if it says real time, there might be some issues because the market is closed right now for stocks. And then if there are filters, like if you have a time frame filter on for like the past hour or the past minute, like say if one of my day trade filters is show me stocks that are moving like up like at least 0.5% in the past 60 seconds. That's not going to give me any data because the market's closed. So if you're still having trouble, if you can't figure it out, just shoot me an email. I'll help you. Also, we do have an amazing world-class support team for anyone who purchases. You can also access my team through this blue bubble in the bottom right corner and click send us a message. And then you just type help and whatever your problem is, and they'll help you very, very quickly on trading days. Usually from about 8 a.m. to, we do have some evening coverage, but 8 a.m. to 6 p.m. Eastern time. And we do have some like evening and weekend coverage. Let's see here, Trader John. Yeah, I will post this link. The link is in the description on YouTube, and then I'm posting it on both chat rooms right now as well. Let's see here. There's one, and then there is the other. And then You know what? I'm just gonna whip up a coupon code right now for everyone. I should have done this earlier, but I'll make that coupon code for the for the 1297 with no laptop. But if you have any other questions, okay, Mila says I don't have real time selected. Milan, if needed, I'll hop on a screen share with you. Realistically, at this point, it might be tomorrow morning. Um, but I will troubleshoot that for you. Uh, let's just make this simple. I'll just call this no laptop. And then thanks for your patience, everyone. Just doing the 3367 minus 1297. You're saving over $2,000, people. 2,070 bucks off of options, mentorship annual, forever. That's what I'm talking about. All right. So I made this super complicated for you. Getting rid of more spam. Hide user in this channel. Super complicated. All you got to do is use the code no laptop. No laptop at pro.benzinga.com/pricing. Actually, I'll just use the same link, but then just change the coupon code. Yeah, use the same link. You'll be good to go for $12.97. I'm copying that. Thanks for your patience, but that way, if you don't need the laptop, you'll save an extra 370 bucks. Excuse me, sorry. There we go. Mylan, you said it worked. Fantastic. Wasn't seeing data because real time wasn't selected at first. Awesome. Yes. So in terms of all these other tools on Benzinga Pro, that help site is available through this question mark in the upper right corner here. You click on that. That takes you to the help site. And then tutorial videos are the third item down on the help site. So you got momentum trading, BZ exclusives. So right here, scanner, newsfeed, details, calendar. That's just in little bite-sized segments. I also have I have one on YouTube. So if you just search how to use Benzinga Pro on YouTube, I think it's the how to find massive winners on Benzinga Pro. That's the one that'll show up, and it's an hour-long demo on the whole platform. But in here, it just goes step by step with each of the tools. All right. Checking the YouTube chat. Yeah, so yeah, if you have any other questions about different packages, if you already have one of Benzinga's other amazing schools and you want to add the options mentorship program with Nic Chahine, just shoot me an email. I'll give you the best possible pricing. It's all about giving you the tools you need to succeed, regardless of where you're at in your trading journey. And I'm going to post my contact information one more time here, so everybody has that. Oh, didn't copy the right one. And then we'll be in touch. This deal is only go through midnight tonight for the 1683 with a laptop or the 1297 with no laptop. So definitely let me know tonight if you have any questions about that. And then of course, we have a world-class support team. So tomorrow I'll be on the phones helping people out. So will my entire team. And we're really glad to have all of you here. Perfect, Mylon. I'll look for your email. Thank you, Maya. Glad to have you here. Let's see, Camille, the trading school. Yeah, if you want, I'll get back to you about the trading school stuff. Because yeah, normally it's like a thing where the trading school is also like that's normally like 4 grand a year, but we could definitely talk about a discount. Jason, I will respond to emails tonight before I leave here. And then I am, I work throughout the week as well. Rudy, yes. My phone number is 313-221-9214. Just keep in mind, I have to get back to about 15 people tonight so far. So I will, I will get back to everyone tonight. Just keep that in mind that if I don't pick up, I'm probably on the phone with someone else. Fantastic. All right. Yes, Doc, I can combine any of our schools with the options mentorship. So yeah, just shoot me an email and I will make that happen for you. See, I'm just finding the little presentation I had here, but I just want to say thank you again. Thanks for being here. Thanks for trusting us with your time. Your time is valuable. Our time is valuable. We want to help you make more money and make it a win-win every time we get together. So hopefully this did the trick for you. And if you have any questions, reach out to me. I'm always here to help, and we'll be in touch soon. Take care, everyone. Have a great night.